And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. As always, this is the show where we bring you where the action is in the broader markets. A little bit of diciness toward the end of last week. We will get into that as always. And then beyond, take a look at some of these sectors and industry groups that are on the move. And as always, we want to see how the broader markets close. But before we get into that, just want to share with you some of the news last week that drove price action. We did get some economic data in the beginning of the week, rather benign, but indicating the economy remains strong. Factory orders, the strongest level in 8 months. We also did see manufacturing turn positive the first time in 17 months. The markets continued to charge to new highs despite that. However, we did hit a speed bump on Thursday. There were almost 10 Federal Reserve officials that were speaking at various events. Some of the comments that were pulled had investors nervous that we wouldn't see an interest rate cut as soon as has been anticipated. However, we did get employment data today that the markets were able to shrug off. The numbers were quite a bit stronger than anticipated. One bright spot is the fact that wage growth was not there. It wasn't as strong as anticipated, and that's what the markets held on to. So we were able to recover some of Thursday's pullback. But again, we will get into all of that and more. I do want to make you aware that next week we have some key inflation data that's going to be released, core CPI and PPI data. So we may see volatility surrounding those two numbers. And let's go ahead, take a look at where we closed for the week. And here we are. This is a daily price chart of the S&P 500. And here is yesterday's sharp pullback with that red bar. We did close yesterday below this key 21-day simple moving average. However, today's 1.1% rally did help the S&P recover. We are back above that 21-day simple moving average. Also, we were able to recover this RSI, which is now back up in positive territory. MACD remains above neutral and in positive territory. So the near-term uptrend for the S&P 500 is in place. Now, from here, I do want to share with you a view of the Nasdaq Composite. And what we're going to be looking at here is the fact that this too did break below this 21-day simple moving average, but the Nasdaq also got awfully close to this 50-day. It got about 1% above. Very treacherous because on Thursday we did have this negative RSI post as well. So also the selling on Thursday occurred on above average volume. So a lot of factors that were a bit unnerving going into the close on Thursday. However, today's 1.2% rally has this NASDAQ index just at that 21-day simple moving average. From my work, I'll talk more about this in my Sunday MEM Edge report as far as what I'm going to be on the lookout for to turn bullish again on some of these growth areas. And it's not quite in a bullish phase yet, but for the most part, I will want to see this broader index remain above that 21-day moving average for more than just one day. From here, I do want to also share with you a view of the S&P 500 and share with you what took place yesterday from a price action point of view. What we're looking at here is a 2-hour view of the S&P 500. So here is this red bar, and this is the last 2 hours going into the close. The broader markets pulled back 1.7%. So a hefty decline into Thursday's close. What I wanted to share with you is a period where it occurred last, and it takes us all the way back to December 20th. The last 2 hours of that day, we did see the S&P 500 decline 1.5%. Now, of note is the fact that on this particular day, December 20th, very similar to last Thursday, the reason for this sharp pullback, very similar. It had everything to do with comments that were coming out from Fed officials that were squelching this recent rally going into the 20th because there was talk that interest rate cuts may take place later in this year. So a lot of volatility still remaining around this interest rate scenario. It's a key component to the broader markets. From here, you can take a look at some of the price action coming out of this December 20th. We did pull back into the new year. Many of you may remember that. I know I do quite vividly. It was unexpected. But then from there on January 8th, we were able to regain that uptrend that took us into this current period. So let's go ahead from here. We want to take a look beyond and see where we are with the sectors. Here we are with the 11 S&P 500 sectors, and we're looking at a 2-month daily price chart view. I've added this RSI indicator, that relative strength, and then sorted these sectors from strength up here to some of these weaker areas down in this lower right quartile. And let's take a look. No big surprise here. Energy up here at the forefront. This group has been on a tear, up almost 4%. A lot of that having to do with an increased price in oil. We'll take a look at that in our next segment. A lot having to do also with those tensions in the Mideast, which are heating up even further, helping these energy stocks continue to propel to new highs. Let's take a look at some of these other areas up here at the forefront. Certainly one area I've been closely following, and I have several names from this sector on my MEM Edge suggested holdings list, is the industrials, XLI. It did pull back sharply yesterday with the broader markets. However, we never got into negative territory with that RSI, and we were able to recover quite nicely with the rally today. So very firmly in an uptrend. I'll share with you some names that look compelling on that pullback on Thursday. So moving through, taking a look at other sectors, it's important to note that technology remains negative. It closed yesterday below that 50-day simple moving average. We were able to just barely recover above that 50. However, your RSI has not made it back into positive territory. So a little waffly here. We've been certainly in a tight trading range here in technology, and it, for the most part, has been a lot of go nowhere in that high growth area. Moving through, looking at some of these other weaker areas, it's also of note that healthcare really fell out of bed. You can see it's closed below that 50-day simple moving average. We do have a negative RSI, and that MACD now entering negative territory. I'll share with you where the real weakness was in this area as we move through. And last up here, I also wanted to share with you the fact that XLC was barely touched by that pullback. And here we are with communication services. I'll share with you some of those magnificent 7 names that really held this particular internet-related group up. The RSI still up here in positive territory, likewise with that MACD. So let's go ahead and take a look at some of the sub-industry groupings. I use ETFs that I find to be very helpful as far as helping get a really good sense of price action and what took place last week. Again, a 2-month view of these industries sorted by strength. And up here is Brent crude oil, and we are now up at $90 per barrel, very elevated level, also very bullish, particularly for the exploration and production, the E&P guys. I'm going to share with you a name that's had a big move, but it is just now breaking out of a base, a major in that E&P group. But here we are with that price of oil really helping to improve the outlook for those energy stocks. Also up here at the forefront, not what we want to see. This is the yield on that 10-year treasury. We closed at 4.38. And you can see that generally we are remaining certainly above that 4% level, which historically has been a level where when rates get above, you'll see growth areas tend to struggle. So keeping an eye on that 10-year yield as a proxy. We did see a pretty big pullback in Homebuilders, and this is prior to Thursday. We did begin to see that pullback, and this is all about that rise in interest rates, which in turn, of course, will increase mortgage rates. So we are seeing a little bit of weakness, but certainly not entirely unexpected given the nice run-up we've seen in these home builders. Moving through, taking a look at other areas that I certainly pay very close attention to is semiconductors. We are still in the throes of a generally positive RSI and MACD, but another area that has been, for the most part, in a go-nowhere environment. But of course, there are outperformers in here that are helping keep that semiconductor group really standing up. Also, talked about healthcare. I'm going to share with you a view of IHI. This is the medical devices ETF. It is attempting to regain its uptrend. Its weakness was one of the areas that healthcare suffered last week. And then also IBB. And you can see that biotech stocks have really been under distribution. It stems certainly from the top. We're seeing weakness in Amgen and some of the other bigger names, but really throughout the group, you can see that the downtrend is very firmly in place in biotech stocks as well, which is not helping those healthcare sector. Also of note, retail really got sold off last week. We can see this pullback. This is XRT, the S&P 500 retail ETF, and it was down 5.5%. From here, I'm going to segue into one of the reasons for that pullback. First up, I am going to share with you a company that came out last week and they guided their growth estimates lower. This is on the heels of already having reported their earnings. And this is Ulta Beauty, ULTA. They have a large online, but also a large brick and mortar presence. And the stock had run up to a new near-term high going into that earnings release, was not able to recover from that pullback. And here we are on this drop on Tuesday in response to management guiding lower. Since the stock is widely known and followed, it did in fact impact other areas, and we saw a number of retailers pull back. From here, I was going to share with you some of the names on that pullback that are more interesting than others. Certainly, when you see this gap down price action, heavy volume, it's not a name that would in any way attract me, but there were some of these bigger names that have also been under selling pressure. I'm going to share with you Home Depot as an example of another name that does not look attractive. This gap down here is in response to the company moving and pivoting into more above residential, getting more into commercial real estate. And the company that they purchased, because of its expense, they are no longer going to be executing their share repurchase program, and they're going to be keeping their 2.5% yield flat. And that's really what got investors selling the stock. We've now broken below that 50-day simple moving average, and now we have that MACD into negative territory. A competing name in this home building space is Lowe's, and this one could be a little more interesting on the pullback. LOW has pulled back almost to its 50-day simple moving average, and this is where you can use historical precedent as your guide. If we go back December into this February pullback and take a look, we were coming out of an overbought position. We did get into a negative RSI situation similar to where we are now. And what I would like to do from here is highlight for you when Lowe's turned bullish. So for those of you that would like to keep a large cap name such as this on your watch list, here's what you're going to be on the lookout for to indicate that Lowe's has turned bullish. First up is going to be a close above each of these shorter term moving averages. We are going to want to see that MACD crossover. That's going to be that black line up through the red, indicating a new uptrend is in play. Also, again, this RSI, we want to get that going into positive territory, and you can see the sharp advance that evolved from there. Certainly, we do have work to do for each of these factors to come into play, but I would say it's definitely one to keep on your radar. Lowe's can be a clear outperformer. Also, I mentioned that other areas in, for instance, industrials that are in this space as it relates to providing products to builders. Here is BLDR. BLDR. And this is a smaller cap name, and it really didn't get impacted from the sell-off taking shape elsewhere. We can see this RSI remained in positive territory, and that's what you want to see. I'm going to be sharing with you other names in technology that really shrugged off the sell-off taking place elsewhere. In reality, those names that can sustain selling elsewhere will go on to outperform once market pressures recede. So from here, I talked about healthcare pulling back and certainly biotechs and medical products, but also we did hear news that was very negative for UNH, which already had this gap down and then this wedging effect, but it gapped down again last week on, I believe, Medicare news. It's going to be reducing their payout. And we can see the stock is in a very clear-cut downtrend. Now, we are in an oversold position, similar to back here at the end of February. We did experience this little bit of rally, but this is why when I pointed out lows and other names in shows past, you are going to want to wait until the positive constructiveness really comes back into play. Again, it's going to be a move back above these moving averages, get that MACD into positive territory and that RSI. So those of you that would like to look at stocks that have really sold off and you're interested in buying that turnaround, be sure and wait until those characteristics turn positive. The odds of a continuation rally are going to be much higher. Now, from here, we're going to take a look just at a couple of names in that tech space that held in well. This is going to be mostly AI related. First up is GCT. Many of you may be familiar with this company. It's had a significant run since this November turnaround, and we had a very sharp rally. This is GigaCloud. The company is partially owned by NVIDIA, among other positive factors. But let's take a look at how it behaved this week while selling took place elsewhere. You can see that we pulled back not very much on Thursday and then held in with a 3.5% rally today. We are above those key moving averages with that RSI and MACD just now getting into positive territory. Another company in the AI space is VRT. This is Vertiv, and they are involved in providing electrical equipment that's very crucial for these data centers that really combine and take that data and turn it into information. From here, take a look. You can see that it held firm above that 10-day simple moving average, with selling certainly in tech and other areas continuing to take shape. Another stock that came in and held in well. Not sure if any of you are into that March Madness with basketball. I know I'll be interested in seeing the turnout as far as how the women's game ends today, but this is DKNG. DraftKings, of course, a major company that is involved in sports betting. And we can see on that Thursday pullback, it pulled back, but it did still hold a gain for the day. And it had a nice 4% rally today, held above this 21-day simple moving average. So these are the kind of names that are really on my radar as far as anticipating continued strength once we see more strength in at least the Nasdaq. Last up here, I talked about a energy stock that has already had an extensive run, but is currently poised for a base breakout. This is Halliburton, and it is a name that I did have on my MEM Edge list. However, I removed it. But what I wanted to share with you as far as what is taking place, and for me, with names, even if I remove them from the list, it was back during this period, I will keep them on my watch list. There's a reason they made it to the suggested buy list, and it has everything to do with strong fundamentals and other characteristics. But if we take a look at where the stock is now, you will note that at about this 43 level, we are on the move toward a potential 8-month base breakout with bullish characteristics. Now, from here, one other view that I'm going to share with you is a weekly chart where it is going to be even more interesting. And this is what I'm seeing in any number of energy names, this base breakout possibility. But take a look, the MACD just entering into positive territory, lots of room to run on this longer term weekly view. And that's it for this week, everyone. I hope you have a fantastic weekend. And again, go ahead and hit that like button if you like what you've seen. And any questions, share them below. See you next week.